Nokia stock is currently trading at $13.14 per share, showing a slight intraday dip of 1.20% as of the market session on May 4, 2026. While the broader market seems to be catching its breath, the reality behind this single-digit percentage move is far more intense than the headline suggests. Most investors look at Nokia and see a legacy telecommunications company, a name from the past that somehow survived the transition to the smartphone age by fading into the background of cellular towers. They expect a slow, cyclical climb. But the reality is that Nokia has quietly transformed into an infrastructure powerhouse for the intelligence age, and the market is just now starting to realize that the company's future isn't tied to your phone, but to the massive data centers powering the largest tech companies on Earth. This disconnect between expectation and reality is exactly where the opportunity sits. The common ground among retail traders is that Nokia is a value play or a dividend stock that moves like a glacier. However, the contrarian take that's gaining steam among institutional investors is that Nokia is now an AI utility. The recent Q1 2026 earnings beat, where they crushed EPS expectations by over 30%, wasn't driven by traditional cell tower sales. It was driven by a staggering 49% growth in their AI and cloud segment. This isn't just a recovery, it's a re-rating of the entire business model. When you look at the recent trading volumes, we are seeing a massive shift in who is holding these shares. The days of Nokia being a sleepy telecom relic are over. It's now competing directly in the high-stakes world of optical networking, which is the literal nervous system of the global economy. Think about the sheer amount of data moving through the world right now. As companies rush to adopt more complex computing models, they need hardware that can move that data at light speed without burning out. Nokia's optical networks unit saw a 20% surge in net sales recently because they are winning design contracts with hyperscalers, the massive cloud providers that usually build everything themselves. They've managed to lower the total cost of ownership for these customers by up to 70% with their new digital signal processors. This is why the stock has ripped nearly 40% in just a few weeks leading into May. The expectation was that high interest rates and cautious carrier spending would cripple them, but the reality is that the AI supercycle has created a demand floor that didn't exist 3 years ago. If you're looking for investment help or exploring various investing sites to find the next big runner, you have to look at the institutional activity. We are seeing major players like BlackRock and various pension funds holding significant positions because Nokia has a robust investment-grade balance sheet with a net cash position of nearly 4 billion euros. This gives them the firepower to acquire companies like Infinera, which they did to solidify their lead in the optical space. This isn't just speculation, it's a calculated move to dominate the plumbing of the internet. While names like Nvidia stock grab the headlines for the chips, Nokia is building the pipes that those chips need to communicate. Without the optical infrastructure Nokia provides, the entire AI movement hits a bottleneck. Recent stock movement shows a classic staircase pattern, higher highs and higher lows. Even with today's slight pullback to $13.14, the daily candles show that buyers are stepping in every time the price touches a support level. This is trend day behavior. Active traders using the Fidelity mobile app or the Robinhood app are noticing that the volume spikes are happening on the green days, not the red ones. That's a signal of accumulation. Institutional desks are swapping out of more expensive, overextended tech names and rotating into industrial AI plays like Nokia because the valuation is still somewhat reasonable compared to pure-play optical rivals. The PE ratio has climbed into the 70s, which sounds high for a telecom, but when you value it as a high-growth networking company, the math starts to look very different. Comment below how many shares of Nokia stock you currently hold, or if you think the shift towards 6G and AI integrated networks will happen faster than the analysts are predicting. To understand why this is happening now, we have to look at what Nokia actually does today. Their business is split into several key pillars: mobile networks, network infrastructure, and Nokia technologies. The mobile network side is what everyone knows, the 5G gear. While that part of the business is more cyclical and faces stiff competition from Ericsson and Samsung, Nokia has found a secret weapon in its technologies division. This is their patent licensing arm. They hold a massive portfolio of essential patents for 5G and various multimedia technologies. This segment brings in over €1 billion in high-margin operating profit annually. It's essentially free cash that fuels their R&D, allowing them to spend €4 billion a year on innovation through Bell Labs. They aren't just selling boxes, they are selling the intellectual property that modern communication possible.
The network infrastructure segment is the real star of 2026. This includes fixed networks, IP networks, and the high-flying optical networks. They are moving away from lower-margin hardware and focusing on software-defined networking and pluggables. This strategic shift is why their gross margins expanded by 320 basis points in the latest quarter. They are effectively becoming a more profitable company, even if their total revenue doesn't skyrocket overnight. They are choosing quality over quantity, a move that is reflected in their decision to let some lower-margin contracts go to competitors while they double down on the high-end enterprise and cloud markets. This is the hallmark of a company that knows its worth and understands where the industry is going. As we look toward the future, the catalysts are lining up. Nokia has guided for an operating profit between 2 and 2.5 billion euros for the full year of 2026. They are also ramping up capital expenditures to expand their manufacturing capacity in places like San Jose, California. This Build America compliance is a massive advantage in a world of increasing trade tensions. While competitors like Huawei are locked out of key markets, Nokia is positioning itself as the trusted vendor. This geopolitical tailwind is a reality that many investors overlook. It's not just about who has the best tech, it's about who is allowed to sell it. With their new indium phosphide facility coming online, they will have even tighter control over their supply chain, reducing the risk of the shortages that plagued the industry in previous years. However, the path forward isn't without risks. The expectation of a smooth rollout for 6G could be challenged by the reality of carrier fatigue. Telecommunication providers have spent billions on 5G and might be slow to open their wallets again. There's also the risk of Open RAN commoditization, which could allow software-centric entrants to undercut Nokia's traditional hardware business. But again, the reality seems to favor Nokia's pivot. By integrating AI directly into the radio access networks, they are making their hardware stickier. They are moving toward a SaaS model for network services, creating recurring revenue streams that make the business less dependent on the next big infrastructure build-out. Investors using platforms like Interactive Brokers or the SoFi trading platform are seeing a divergence between Nokia and its traditional peers. While Ericsson has struggled with market share losses in North America, Nokia has been gaining ground in the private wireless sector with over 1,000 enterprise contracts. They are providing the private 5G networks for factories, mines, and ports, places where reliable, low-latency communication is a mission-critical necessity. This enterprise segment is growing at double digits and represents a massive untapped market that doesn't rely on the whims of consumer cell phone plans. For someone managing an individual brokerage account or looking for self-investing opportunities, the narrative on Nokia has shifted from wait and see to don't get left behind. The trend is your friend until it isn't, and right now the trend in Nokia is pointing toward a multi-year re-rating. We are seeing analyst price targets being hiked toward the $15 and $16 range as they start to value the company against its optical peers rather than just its telecom rivals. This shift in valuation framework is the most powerful catalyst a stock can have. It changes the entire gravity of the share price. In summary, the story of Nokia in 2026 is a classic case of reality exceeding long-held expectations. The market expected a boring, slow-growth hardware company, but what it's finding is a high-margin, AI-driven infrastructure leader with a rock-solid balance sheet and a clear path to dominating the optical networking space. We've seen the stock break out of a decade-long range, fueled by genuine earnings growth and a strategic pivot that is finally paying off. The intraday movement to $13.14 is just a small chapter in a much larger story of institutional accumulation. The central insight here is that Nokia is no longer a phone company. It is the utility provider for the digital age. By focusing on the high-margin, high-growth segments of the network, they have protected themselves from the cyclicality of the past and positioned themselves for a future where data is the most valuable commodity on Earth. This contrast between the old, boring Nokia and the new, essential Nokia is why the authority of this move is so compelling. As long as they continue to execute on their optical and AI roadmaps, the momentum is likely to remain in favor of the bulls. The market is finally paying up for the invisible infrastructure that powers our world, and Nokia is sitting right at the center of that web. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, unshare with your friends, bell, subscribe for more updates.